In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement. We are a weekly show that keeps people just like you in the know about all things retirement. I'm your host and financial advisor, Rick Everett, along with our full complement of panelists to include Jonathon McCoy, financial advisor with Market Advisory Group. From Market Tax Services tax specialist, Susan Curtis. From Market Medicare Advisors, Taylor Bevan. And with Eidelman Law Firm, our estate planning attorney, Gerald Eidelman. This week, we're discussing how a large savings in retirement funds can be a blessing and a curse when it comes to your retirement finances. We've touched on this on many previous episodes, but the fact is, it's a guessing game to know what the tax rates will be like in the future. And because of that, retirees today really have a hard time knowing how much of their money they're actually going to keep after taxes and health care are both paid for. Jonathon McCoy, you brought up the fact that a lot of people you meet with have this concern, and a couple you recently met with have this exact concern.
Yeah, so specifically, Tom and Nancy, for this week's story, there are a couple that they actually they watch Eye on Retirement pretty regularly, so we've actually changed their names for anonymity this week. But for today's episode, Tom and Nancy, as we'll call them, they came to meet with us because of this recurring concern that Nancy had specifically. She's a retiring accountant that had actually spent several decades in the banking industry. So she had a lot of background in terms of how the numbers work and the terminology in the financial world in terms of knowing the difference between IRAs, Roth IRAs, so on and so forth. But where she wasn't quite as well versed is proactive tax planning strategy, which is what had sort of tuned her into Eye on Retirement as her and Tom are watching each week to begin with. When they first came to meet with us, it was right after they'd actually come to one of our in-person tax presentations. So they dived a little bit deeper. And the interesting thing that I found was they were already working with actually 3 different financial advisors in their circumstance. One had some assets under management and a retirement account that they had to roll over because there were some stock buyout options that Tom had at work that the company said, we don't want to keep paying you guys this stock, so we're going to force you to get it out of the company plan. So it was either take the money out, pay the taxes on it, or roll it to an IRA. Well, essentially, they went to a neighbor down the street, rolled the money to him, and then started asking some of these tax management questions. And what do we hear so often from those financial advisors? But, you should take those tax-related questions to your tax advisor. Well, in this circumstance, the unfortunate part for Nancy and Tom is Nancy had always done their taxes. Nancy was the one with the financial background, and even she was banging her head up against this very hard brick wall of not knowing what the actual beneficial outcome of this tax planning process could be, or even where to start. As much research as she had done, as much of an understanding as she has, she really just didn't even know where was square one when it came to their longer-term financial plan.
So what's the approach that you as an advisor utilize for someone who feels stuck in this process of trying to grasp their tax situation while planning for their retirement?
Well, part of the benefit that we have here is we've seen this process play out with thousands of households. So understanding what questions to ask and being able to compare their situation to hundreds of others that we've come across in the past, and knowing that with Susan and our team at Market Tax Services that we've got the reliable resources to be able to fall back to get a better understanding and also know which questions to be asking. Because I find that, especially for you, those of you who may be out there with a financial advisor that's consistently telling you, take your tax-related questions to a tax advisor. For some people, they're concerned that, what is a CPA or a tax advisor going to cost? They're maybe a little hesitant to go and reach out for that service. This is why we offer the one-on-one complimentary consultation process, where we bring the tax advisor, the Medicare advisor, and the estate planning attorney in on a complimentary basis, because these are the folks that we have that know which questions to be asking. And especially on from a tax perspective, that's square one for us, is we've got to know what are the potential negative outcomes of not having that plan before we can start putting the proactive pieces in place.
Susan Curtis with Market Tax Services. For Tom and Nancy, how did you go about building a tax planning strategy for them?
Well, working alongside with the advisor is very important. We're able to sit down together and bounce ideas off of each other and take the middleman out and, get straight down to business and project those future taxable income situations. By working with Jonathan and our advisors, we're able to work through the situations and build an appropriate tax plan for our clients.
There were a lot of variables coming into play in this situation. Like if Tom stopped working, it'd go one way. If he didn't, they'd go another way. So do you find it's crucial for you to be able to have the whole picture from the advisor himself along with the client?
Yes, it is, because without having that whole picture, then you're only giving like half the advice. So if you only have half the story, how do you put the whole story together and give complete advice?
Jonathan, I don't think it could have been worded any better. You said Nancy was the one in charge of the taxes and the general financial management. Mm-hmm. What are your thoughts when one spouse tends to manage the finances for the household?
Well, the challenge there is, well, first of all, especially when we start thinking about estate planning, who's going to take care of those finances if something happens to the so-called CFO of the household. But especially in Nancy's circumstance, she felt she knew where her boundaries were from the standpoint of knowing where her limitations were in her traditional training in the banking sector and where those limitations began in terms of not being able to build her own tax plan because she didn't have the tools at her disposal nor the licensing and certification to know which questions to be asking herself. Otherwise, she would have already had a tax plan together to begin with. Mm-hmm. And she had consistently sought this service from, now in her circumstance, 3 different financial advisors and had gotten the same feedback, which was essentially none other than talk to a tax advisor. So they came to us understanding that we would have access to the tax advisor with Susan. My main job up front was get to know their story, understand what their lifestyle and circumstances were going to be requiring. And I'm so much more focused as a financial advisor on, especially once Tom quits working, what are the budget needs, what kind of income are they going to need to live on? We talk a lot about risk tolerance and things. Those are important pieces to the pie. But Nancy's looking at this from the perspective that they're running out of time from a tax planning perspective because we know that the tax code is going to be changing within the next few years. She knew when that deadline was going to be, and she just felt like she was running out of time to do all this research on her own. That's why she came to us in the first place.
It sounds like you ask a lot of questions in your line of work.
You would think that we're there to give some sort of sales pitch or just constantly spit advice. You need to do this, you need to do that. But without knowing what your intended outcome is from the situation, because we could easily sit and talk with someone that has $10 million in an IRA that knows that there's going to be some tax implications, but they just choose to stick their head in the sand. It's not even a concern to them. Well, if it's not a concern at all, maybe there's no need for change. If you're comfortable with how your money's being managed and you don't see the need to throw this all up in the air and start seeking better advice, then great. I think the majority of folks that we talk to are on the other side of that fence where they want to have an understanding that their financial situation is going to be as much in their control as possible. And the only way that we know to do that as financial advisors is asking the questions, understand their concerns, and bring in the appropriate professionals when those different subjects come up.
Especially in retirement planning, knowledge is power. And by you being able to ask those questions, putting that whole picture together, as Susan said, and give complete advice, that's exactly what we do.
And just as Nancy was very astute to know what she didn't know, we as financial advisors have to know our limitations as well. And without having the assistance of the rest of the team here, we're unable to provide that same level of service for our clients. The benefit here at Market Advisory Group ultimately is just that. The team approach lifts all boats, makes us all stronger, and allows us to provide that appropriate advice.
We'll keep digging more into this tricky tax situation for Tom and Nancy. For do-it-yourselfers, it can be tough to hand over the baton to someone else to run the race for them, but it can help not to think of it like you're giving away control of your retirement planning. Instead, look at it like you're gaining more control because the advisors could probably know something that you don't, that could save you money and get you ahead on down the track. If you'd like to see how a team approach can work for you, just a complimentary no-obligation consultation. Operators are standing by right now to take your call at 316-252-8707. And be sure and check out our website at ionretirement.com. Back with more of the show right after this.
Out on the water, there is a moment. Perfect synchronization. The team working together in harmony to reach their goal. Now, imagine finding a team of financial professionals to help run your course down the river of retirement. Market Advisory Group is that team. Financial advisors, tax professionals, estate planning attorneys, and Medicare advisors, all in the same boat. If you don't have a team like this in one place, it can become a hassle to relay information between them. When you come to Market Advisory Group, we bring everyone together for you to get you answers in real time, to help make sure you don't miss something that puts your unique plan off course. You shouldn't be the one doing all the work to keep your retirement on pace. You should have a team in the boat with you. Your voice telling them where you're at, where you'd like to end up, and how you want to get there. And at that point, everyone falls into sync, all pulling in the same direction, toward the same purpose. Your retirement's financial security. We are Market Advisory Group, proud sponsor of Shocker Rowing.
Hi, welcome back. Before the break, we were talking about the concerns and frustrations that Nancy and Tom had prior to meeting with Market Advisory Group. They had looked around for good tax advice with some advisors they already knew, but all that to no avail. Jonathan, were taxes the only reason they came to talk to you and the team at Market Advisory Group?
So that was the instigating issue in their situation. Again, Nancy, with this financial background in the banking industry of over 40 years, almost 50 years in that industry, she felt knowledgeable enough to sort of know where to look for some of this information. But when it came to proactive planning, that was sort of a brick wall they were up against. After some additional lines of questioning, you asked in the first segment, are we so focused on asking questions, asking questions, asking questions? That is the primary basis for our entire process. How else can we so well know someone's situation to be able to give them the advice that they come seeking with us? And ultimately what I found through asking additional questions on their existing investment portfolio was they had no idea what they were already paying their current financial advisor. And we're working through this process with this couple as we speak to not only help them understand what they own, the risk-reward profile of their portfolio, but also know how much is it costing them, and is there some potential savings at hand there, whether it means beginning to work with us, whether we're charging lower fees or not. The question is, for the fees they are charging, what really is the level of service that they're receiving? Is their advisor only concerned with how their money is being invested, which is something that I think they're sort of reading in the tea leaves in this situation. Some additional questions led us down the line of their healthcare situation. With Tom still working, if he were to retire, what is their health insurance picture going to look like? But then in addition to that, we asked some questions on, what does their entire family situation look like? How do they plan to use their nest egg long term? And the one thing that Tom spoke up and said was, well, we're not looking to leave any of our kids rich, I can tell you that. And everyone fits on that spectrum somewhere, right? Some people do have that estate plan in mind where we want to leave a sort of a step up or a boost financially to the next generation of those beneficiaries. Other folks say, we've worked hard for this money. We want to maximize our years in retirement and enjoy as much of it as we possibly can. And my very first client in this industry told me he wants to see his very last check that he writes bounce. So that's a challenge as a financial advisor, and ultimately mathematically we don't know that things are going to work out that perfect. But that estate planning concern, I thought it was very interesting from their perspective that they were planning on using their assets more so than leaving things behind. But when I started asking questions before getting Gerald involved along the lines of, what if you don't live as long as you expect? What if throughout your travels in retirement something were to happen to both of you prematurely? how are you assured that your assets are going to wind up in the hands that you want?
Gerald Eidelman with Eidelman Law Firm. In a case like this, Nancy and Tom expressed an interest in enjoying their retirement savings. They also indicated that they'd rather have a nest egg that they have left wind up with family rather than paying it out into a nursing home. How do you balance those desires?
Well, part of the complication is you have to figure out that they weren't trying to save it all for their kids. They wanted to enjoy it. And a lot of times, in order to prevent that nursing home spend down, you wind up having to plan and put money away that you may not readily be accessible to you to spend yourself. In the case here is, what we do is we choose certain assets, like in this case, they had a home that was already paid for. They had an account that they were moving to Jonathon, and that they didn't need that in part of their budget. They weren't concerned about that. So we were able to transfer those assets into a Medicaid Asset Protection Trust. That meant that regardless of what happened to them at the end of life, that money inside there wouldn't be touched after 5 years.
Do you see people with estate plans already in place that could be missing important levels of protection? And how does working with the tax and investment team at Market Advisory Group make a difference in the work that you're doing?
Well, that is very common for people to come in and just work with a estate planner. They already have a estate plan in place. And I look at it and I see a lot of holes. Now, some of those I can't fill myself. There's always a tax question whenever you're doing financial planning. What is it going to be the impact now, tomorrow, when you leave, your children, retirement accounts, what are the tax consequences for them? How can you ameliorate that problem? And so working with the financial advisors at Market Advisory Group and the tax advisors and market tax services, it's an enormous opportunity for us to be able to get a complete plan, fill out the gaps that were left behind by another estate planner.
It's obvious in this case that assuming a financial advisor can handle all these jobs for their clients is a tall, if not impossible, task. But when skilled professionals work as a team the way we do at Market Advisory Group, your estate planning attorney can talk to your tax advisor. Your financial advisor can quickly bring in your Medicare advisor into the conversation. If you'd like to set up a complimentary, no-obligation consultation with our team, operators are standing by right now to take your call at 316-252-8707. That number again, 316-252-8707. And be sure and check out our website at ionretirement.com. We'll be back with the final segment of this show right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
Welcome back into the show. Jonathan, Tom, and Nancy leaving, they're leveraging the tax and estate planning departments, coming to you for investment management, advice. You also mentioned there was a line of questions they had around health care in retirement. How'd that conversation go?
Well, how it came up was actually, again, a question I asked them. Since Nancy is retired, Tom's still working, what is their health insurance plan for the next number of years? And they pointed out, well, part of the reason Tom is still working is to carry health insurance through his employer for him and Nancy. And, you know, we had to set up the timeline between now and when is really the appropriate time to have that conversation around alternative health insurance options, whether it's switching over to Medicaid, looking at the Affordable Care Act, or whatever those options are. But fortunately, they did have the flexibility within Tom's career for him to work basically as long as he needed to get Nancy at least to Medicare age, turning age 65. And just opening up that conversation, they had a few, you know, unknowns there in terms of what if Tom were to leave his work early, what could they maybe use to get them through a year or two without Medicare or prior to Medicare. But ultimately, that wasn't their main plan. So my main reason for bringing in Taylor and our Medicare team originally was to give them a better idea of when having that serious conversation about those Medicare coverage options are. And that's a big focus of their team, is making sure people know when certain decisions and conversations need to be had.
Taylor Bevan with Market Medicare Advisors. How do you help folks understand their options, and what do those timelines for getting signed up normally look like?
Well, there is always a lot of information coming at people, especially with Medicare, and we're always looking for potential gaps in any coverage to, you know, make sure that we can close those gaps and help get the client covered for anything that may happen. Nancy and Tom's situation, they weren't ready to get on Medicare, so there wasn't a whole lot that we could do right now other than kind of just paint a picture and get a plan as to what we needed from them when it came time for them to make that switch. And so after digging into their situation, we did notice that there were some existing gaps even in Tom's employer health insurance. And so we looked through what those gaps were, and we found coverage to help close those gaps should any unexpected expenses, medical expenses arise, you know, such as cancer or anything like that.
So you can help people even if it isn't quite time for them to go on Medicare.
Yes, so our job is to help all of the clients understand their coverage options and going over those options and getting a plan put in place for them so that they don't have to stress when it comes time. Like I said, we want to have enough time to get them their information of what they're really needing, what their health concerns are. Do they have, you know, any pre-existing conditions? And then to look at that timeline of getting Nancy and Tom in about 3 months before she turned 65. When they came in, unfortunately, we were still in 2023, and those numbers are changing annually, so we couldn't give them solid numbers on what they were expecting to look at. But when they come back in that 3-month period, that's when we would actually have real numbers for the current year and to be able to go over and find a plan that fit their financial needs.
And you know, health is not always a predictive entity. In other words, you always encourage, I've heard you say this many times, people should come in about 3 months before they're ready to start Medicaid, or Medicare rather. But in that 3 months time, things could change. So there's still time to adjust. But it's good to have like a pre-plan in place almost.
Right, and so the good thing with Medicare is there is no underwriting that they would have to go through, but we still want to make sure that we are looking at everything possible that could potentially go wrong or go right to make sure that there are no gaps in any coverage for medical reasons, because when you're in the middle of a medical situation, the last thing that you want to be thinking about is this going to be covered? Mm-hmm. And so we help give them peace of mind to know that it will be covered.
Jonathan, safe to say in retirement planning, whether it's the estate side, the Medicare side, the tax side and its implications, there's a lot of moving targets in this plan.
Yeah, and it almost seems like the entire system around retirement in the United States is set up to work against us in some ways, where it's just this mess of information that people are having to pour through, especially in the Medicare world, where people are being bombarded daily in a lot of cases as you're approaching that age with a mailbox full of pamphlets and emails and things like that. What we have to be focusing on is not just weeding through all that noise, but really focusing on that individual circumstance. What I'm looking for from the Medicare team as a financial advisor is how is this going to be impacting their budget? Once we have a better handle on what their health insurance needs are going to be and what they're going to cost, I can give them a better idea of, okay, here's the income withdrawal need that we're going to need to account for that piece of your budget from your retirement accounts or pensions and Social Security and things. All of these individual pieces, especially the tax management side, has a direct impact on the financial plan that we do as advisors. And without these additional professionals, really, I find that we feel that a lot of financial advisors in our industry these days are almost flying blind from the perspective that they're not licensed to deal with all of these different areas. And if you're only looking at how your investments are performing, it can be very difficult to get that plan together.
Something we hear a lot of clients say in our conference rooms is we didn't know what we didn't know. And everyone has blind spots in life, but you don't want those blind spots to cost you security in retirement years. If you'd like to set up a complimentary, no-obligation consultation with our team, operators are standing by at 316-252-8707. Go ahead and make that call. That's all the time we have for this week. I'm Rick Everett, along with the entire team, reminding you we're here to keep an eye on retirement.
Unless otherwise indicated, all client and prospect names mentioned on this show have been changed to protect the identities of the individuals discussed. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns are not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. The guest commentators featured in this show are not investment advisor representatives of Foundations and do not provide advisory services. Market Advisory Group does have several investment advisor representatives that can provide such services. This is not endorsed or affiliated with any U.S. government agency, the Social Security Administration, or associated with any federal Medicare program. We do not offer every plan available in your area. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all of your options. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. All rights reserved.